It's been an amazing 6 weeks. Thank you so much. We began in July, and now in August we finish with the last module on Profit First, a smart approach to financial success. So welcome to everyone. Karibuni sana. You can say hi on the chat. As always, what you are looking forward to in today's session. Last week, we had an exciting session on strategic partnerships and global markets, where we also had our Director Business Banking, Suraj Shah, joining and giving SMEs an insight into key factors for success. We looked at the 5 C's of credit, and then we had Frida taking us through what makes good networking and how you can build strategic partnerships. So it's been quite exciting. We've covered very many modules that go towards building your businesses, right from work-life harmony, building a legacy, AI, and now even the strategic partnership. So it's been really a wholesome training program, and we've had different aspects of our businesses covered, and we just want to thank you for your commitment. We love to see SMEs going even, an extra mile to try and set up their businesses for success. And so today's module on Profit First is one that is going to help you even further on that journey and how you can start ensuring profitability from day one, because we know that it's that profitability that makes you survive. And so I think this is all about looking at longevity by design. So from the get-go, how will you set your business up for success? So good morning. Thank you all for joining. Good morning to you all. Again, let us know what you're looking forward to. What has been the biggest aha moment from this past 5-6 weeks? What have you been reflecting on? We've had really great insights shared. So thank you so much, Kevin. We see you from Mombasa. We see you, Duncan, from Bomet, James from Malindi. We see you all. Thank you so much for joining in. Today is our final module, but that doesn't mean it's the end. We will be having exciting things for the rest of the year. So you should also just stay tuned for the exciting sessions we will be bringing your way post today's program. So thank you all for joining in. I'd like to welcome Frida, who has been carrying us through this entire journey. And today she's about to finish with a bang so that you can take your businesses to the next level. So karibu sana Frida as we finish on module 6.
Good morning, everyone, and I hope you're well. I hope you're all doing well. We have come to the final session of our time together. Can you believe 6 weeks are actually gone? And I see quite a number of you have logged in. I'd just like to see in the chat, how many sessions have you joined? There have been 6. Just put a number in the chat for us so I can see how many have joined 6, how many have joined 1. Perhaps today is your first one, I don't know. Help me know by just putting in the chat so that we can take this train off the tracks. So let's see here. Let's see. All right. I see the people who have joined 6. Congratulations. Okay. 5, 4, 6. All right. Thank you. So 3, 4, 5. Oh, wow. 6. All righty. Thank you so much for joining with us. I don't take it for granted. I know entrepreneurship requires a lot of our time, but most importantly, entrepreneurship, sometimes you plan to come and then something else shows up and then you have to juggle it. But the good news is the slides will be shared with you, at least all the slides of what we have done so far. I'm sure DTB has shared with you, and the rest are going to come. So this morning we're talking about profit first. What is profit first? Last week we had Suraj speak to us, and I really, really enjoyed his session. He said that the 2 things he said that were very critical for me. He said we need to manage our cash flow because cash is king. And he also said that we we need to work towards having, what did you call it? Towards having collateral, all right? And why collateral? Many times as an entrepreneur, one time is going to come that you will need money. And the day you will need extra money, the bank can help you, or an investor can help you, somebody else can help you, and they're going to want to see some collateral. Now, Profit First is a cash management methodology that can help you show somebody how your organization is making money. It can also ensure that you are getting paid. Many of us don't pay ourselves because we are working for the business. The business is not working for us. How many pay themselves a salary every month? If you pay yourself a salary every month, put in the chat, yes, yes, why? If you don't pay, if you pay yourself sometimes and sometimes you don't pay yourself, I want you to put S. If you never pay yourself because you're sacrificing for the business, please put N, no. So why? If you pay yourself 20,000 every month, whatever the amount is, okay? Like Mantui gets a salary every month. Do you get a salary every month? If the answer is you do, put YY. If it is sometimes S, not at all, N. I'm coming to the chat to see your answers because this is going to be very important for us. Okay, so let's see the chat. My computer skips, but I'm gonna try. Okay, it's you just touch it and it goes. Okay, so I see a couple of N, sometimes N. Okay, there's one YY. I saw one YY. No, N 4 times. You should resign. I see double YY from Amish. Thank you. So I see the YY. N, all right. So Mantui is there. Mantui, can I just ask you a quick question? Sorry for ambushing you. If you can just come and play with me for a minute, if you're there. So I see the
Sorry,
YY,
Frida,
the SS.
I was lost a little bit.
Fantastic.
Please come again.
How long have you worked at DTB?
This is my 5th year.
Congratulations. When do you get your salary?
Usually get it towards the end, so like 25th, thereabout.
Around 25th, correct?
Yeah.
All right. So all the 5 years on the 25th, pap, there's money in your account. True or false?
Yes, true.
Let's pretend that the last 6 months, at time things were really hard for DTB and they have not been able to pay you for 12 months. What would happen?
Hey, that's a hard one.
That's a
I don't
hard
know where
one.
I'd begin. Yeah.
Because you don't know how you will pay your bills.
Yeah.
So here, thank you very much, Mantui, for playing with me. So on the chat, I have entrepreneurs telling me they don't pay themselves, they pay themselves sometimes. And that's why I'm teaching them Profit First today so that they can pay themselves consistently, no matter the amount. Thank you very much for sharing. So now, all of you out there listening to me, if your business is not able to pay you, that is the first red flag. When I talk about your business paying you, I don't mean replacing your corporate income or your job income. I simply mean you have a structure that you're making money, and out of the money you're making, you have separated it in such a way that you are able to pay yourself every month. If you are not able to do that, that is the first red flag. Do you know that as an employee, you can go to the bank and get a loan with your payslip? Entrepreneurs don't get loans because we cannot show a consistent track record of how we are receiving money and how we are spending it, but most importantly, how we are paying ourselves. So we cannot be trusted. All right. So that's number one, why I like the Profit First methodology. It is a book by a guy called, I'll put the name in the chat for you. Or if you just Google Profit First, you will see a book. It has a blue cover. The guy is called Mike Michalowicz. I know I'm not saying the name right, so just look for Profit First and a blue cover. So this is something I've done. I'm certified in it as a Profit First facilitator. And I like it because it goes against the traditional accounting, but it does not override the traditional accounting. So hear me very carefully. Traditional accounting says sales minus expenses equals profit. And oftentimes, if you do your audited accounts, you will notice that you have a profit, but there's no money in the bank. That is what I noticed the first time when I started looking for an alternative and came across the profit first methodology. I remember that year, maybe that year, the money that was showing in our audited accounts was not in the bank. And I told the accountant, I cannot do this every year, that when you're having this time, you're showing me numbers and there's no money in the bank. And he didn't have an answer. So I went out to look for an answer. As entrepreneurs, we need to be cognizant and conscious of the principles we are using to run our business. Are they for small business or are they written for the corporates? So you need to be conscious about that. This morning, we are having a conversation. Why profit first? When we're talking about sustainability, we talk about impact on people, planet, and then the third one. All right. So you need to know what kind of organization are you running at, which season are you in, and what kind of principles and ideologies you're signing up to. So the profit first flips it and says sales minus profit equals expenses. So you take your sales, you decide how much the profit is, and then you spend the rest. Now, that is how cash is coming in. That has nothing to do with the accountant. The accountant will do the traditional accounting of income statement, the profit and loss statement, and all that. But every time as the cash is coming in, you have another system running to manage your cash. So let's jump into it. And before, most businesses are busy but broke. You saw, if you are not able, if you feel, no, me, I'm not broke. If you are not paying yourself, you are broke because you have not paid your salary, you don't have any money. The money that exists is for your business. So you and your business are not one. You are two different entities, okay? Your business should have money and you should have money. Your lifestyle your business should be able to feed your lifestyle. And if it is not, then you're able to find other things to do without killing your business, or put all these things, structure them as a group company. All right. So let's move along. I hope that made sense for you. So moving along here, the profit first formula is a new formula. New because you're hearing it for the first time perhaps, but it says revenue minus profit equals expenses. All right. So revenue is all the money that came in. And I'll show you the profit percentages you can consider as a beginner in this kind of methodology. Profit is reward for ownership. And in the profit first formula, we say that there needs to be money. As soon as money comes in, a percentage should be put aside as profit. I'll show you how. And then the owner needs to be paid, not immediately, but the money needs to be put aside and the owner is paid bi-monthly or monthly. Have you noticed that even as entrepreneurs, when somebody asks us for money, we say mwisho wa mwezi, come at the end of the month. That is a mindset. At the end of the month, employed people get paid at the end of the month. Self-employed people can be paid weekly, bi-weekly, or monthly based on how your sales, how often you're making sales. Mama Mboga pays herself daily, all right? So we should learn from her. So taxes must be prepared in advance. Every time you pay you do an invoice, you must do your e-teams so that you pay the government right away. I want you to know that the government does not take your money. You and the government are partners. And as partners, every time somebody buys from you, you are charging them 16% and remitting that to the government, all right? So that we can have a nation that is self-sustaining. I know you'll have many things to say about that, but I have discovered The good book says that give Caesar what belongs to Caesar and allow God to take care of the outcome. When we do what we are supposed to do, God takes care of us. So you're probably thinking, I pay taxes. I don't know what this government is doing, this and the other. No, you do your part. Let God deal with them. All right. So you cannot join them because they're at another level and you want your life to run well. So do the right thing and God will reward you. So operating expenses, run the business within what's left. Many times when a lot of money comes into the business, we start thinking of the things that we need to do. But when we have the profit first methodology, we are going to have a standardized way of handling money so we don't get carried away and go to Dubai or go to Mombasa. And there's nothing wrong with that. You can plan to go to Dubai and Mombasa with your pay or with the profit account if it is something that is going to add value to the business. So what is the profit first methodology? The profit first methodology recommends that for every sale you make, you should have 5 accounts. For every sale you make, you should have 5 accounts. And those 5 accounts, you can open them at DTB. All right. So the first account is the income account. All the money that comes in must go into the income account. And then you open another account called the profit account. And I'm going to show you the percentages that you need to put in the profit account. The third account is owner's pay account. For every shilling you earn, what percentage must go to you? That goes into another account. Now, the profit account should be an account that you cannot access all the time. It should be an account that does not have a checkbook, does not have you are not charged for using it, so that and also it's hard to access. It doesn't have M-Pesa or online banking, so you only access it when you need it. And the profit account is the account you use to generate assets. You can use it to get an overdraft. You can use it to get access to capital, all right? But you don't use it for daily living. And because if you wait for your company to break even, if you wait for your company to get the traditional profit, you might never do anything with your money. So you need to start today and you need to start where you're at. So it is like a principle of saving. You know, in saving, we are told pay yourself first. So that is owner's pay account. And then there is the tax account. The tax account, you know how much we are charged for tax, 30% on individual and 16% for VAT. Now, you pay the 30% on individual or you pay payee based on the structure you choose. You can choose payee or you can choose the 30% based on how much your company is making. And then you have 16% for tax. And you need to work with an accountant for that so that you're paying yourself every month and you don't get charged a lot on your business, income. Then there's the operating expense account. Ideally, you should have a budget. We talked about a budget in one of these sessions, and the budget should show income and expenses. How will money be made, and how will the money that is made spent? Most of us do a budget and we're just showing how much we want to spend, all right? 70,000 on rent, 20,000 on petrol for the car, X amount for school fees. But on this side of income, there's nothing. So I encourage you to first find out how much income should you make that is going to meet your obligations, all right, and your desires, okay? I see one person has raised her hand. I kindly ask you to put your question in the question and answer so I don't lose my thoughts. We are going to have a break at 12 where I'm going to answer all the questions. Okay? So let's move on here. So tax account, and then we have operating expense account. I'll show you how to manage all these. Okay? I need to put my time somewhere so that I don't get carried away. So, okay. So this is a table for the how to, you can take a screenshot of this take a screenshot of this. I'm just setting up my timer here. Okay, so I hope you've taken a screenshot, and this is the profit fast. Here is the guy's name. This is the author of the book is Profit Fast. So remember, this is not an accounting system, and everybody with their hand up, please put your question in the question and answer so you don't forget it. I'm going to come back to you. So with this, we call this the target allocation percentages, all right? And in the target allocation percentages, if you look at the top, you will see the real revenue range. What is real revenue? Real revenue is the money you get after you have removed how much it cost you to generate that revenue. I'll show you an example just now with a company called Kijana Mobile. So if you're in category A, earning 0 to 250,000, these are in dollars, but let's just make them Kenya shillings for now, because $250,000, a lot of you are going to say that's a lot, but this is a table that can guide you. So real revenue 100%, and then profit should be 5%. Real revenue 100%, all the money that you get after deducting what it cost you to make that money. Number two, if you're in category A, every cash that comes in, you should save 5% and put it in that profit account. You should save 50%. If you're in that 0 to 250 category, 50% of it should go to owner's pay. And it doesn't mean that as soon as the money comes, you take 50%. Because remember, on an ordinary day, you have different sales coming in every day, all right? So when the sales comes, remove what it cost you to make that sale, and then 5% profit, 50% owner's pay, 16%. America, it is 15, but in Kenya, it is 16. So remember, tax 16% put aside, and then 30% put aside for operating expenses. This 30% you're putting aside for operating expenses is you cutting your coat according to your cloth. Okay, so you do that. So here is an example how that could work. Make sure you've taken a screenshot of this, all right? Because now I'm going to show you a real example of how it works. So crossing over here. So we have Kijana Mobile. Kijana Mobile sells mobiles and mobile accessories, and he has made a sale, all right? In his sale, he has made 110,000, all right? All the money he has made is 110,000. Direct expenses, yeah, that's the word I was looking for. What it cost him to make the 110,000 is 40,000, all right? So all the accountants are going to freak out about this, and that is okay. We are using this methodology because we are telling accountants we are tired of seeing profit in our audited accounts and there's no money in the bank. We want to make sure that the next time we're looking at our audited accounts, we do have money in the bank. Your traditional accounting is not showing us. All right. So now, if you remove 40,000 from 110, you get 70,000. Out of this 70,000, profit 0. He didn't put aside any money for profit. Owner's pay, he didn't put aside. Okay, owner's pay, he put aside 50,000 Kenya shillings. All right, and then tax, he put 6,000, and then operating expense, he put 48,000. So let us look. If you look at the second column, you have the allocation percentages, all right? So real revenue, 100%, all right? So then you have his real revenue is 100%. If you look on the profit first column, what you were supposed to put in is 70,000. Fantastic. If you look at profit, he put nothing, but he's supposed to put 5%. 5% of 70,000 is 3,500, okay? And then on owner's pay, he's supposed to take 40%. According to the category, I'll go back here. We are using, he made 110,000, so we are using category A. And if you look at category A, he's supposed to take 50% for owner's pay, and he's supposed to take tax 16% in Kenya and operating expenses 30%. All right, so that's why I said take a screenshot, so as I'm speaking, you follow. But I have it here. So owner's pay, he's supposed to take 40%. He took 50,000 instead of 28,000. In taxes, he's supposed to take 16%. He only put 6,000 instead of 11,200. Remember, as an entrepreneur, you're supposed to file your VAT every 19th of, no later than the 20th of every month. Many of us say that I have not reached the 5 million level, so I have not registered for VAT. My friend, you're cheating yourself. How much is 5 million a year? When you say 5 million a year, 6 million a year is going to be 1.2 million a month, I think. So your mindset will determine the amount of money you make, number one. Number two, the time I talked about going global and accessing corporate bids, you are not going to get a corporate bid if you do not have a tax compliance certificate. If you're in business and you don't have VAT, you will not get the tax compliance certificate. So start as soon as you can and don't use excuses to mortgage your business, all right? So 16% should have been 11,200 because you do your teams for the corporate company before they pay you, they're even going to withhold some of the VAT. But you just want to, because our systems are connected now with KRA, you just want, that e-teams thing is connected with them. Every time you're giving somebody an e-teams receipt, it is showing how much you have made. And remember, the 16% is not your money. It's not coming from your pocket. You wanted to be paid 10,000, all right? So before Wanjiko pays you 10,000, you need to add 16%. So technically it is Wanjiko that is paying the 16,000 through you to the government. So as entrepreneurs, we need to get off the we need to get off the train that we ask people, unataka receipt? Do you want a receipt? Do you want with VAT or not with VAT? Because you're going to put yourself in a muddle that will put you into trouble. How? If you say, I'll give you, if you want cash, we won't charge VAT. And then this person goes and shows that they bought from you and they're claiming VAT, you're going to get into trouble. All right. So it's better to do things neatly because it is not money coming out of your pocket. It is money coming out of the customer's pocket. And we are paying taxes so that we can depend on ourselves. Lipa ushuru, ujitegemee. All right. Okay, so on operating expenses, he took 48,000. And he's supposed to take 30%. No, this is wrong. He's supposed to take 30%. All right. Operating expenses, he's supposed to take 30%. And 30% of not 39. How did I do that? So let's just quickly take a look here and say 30% of 70,000. And I'm not an accountant, all right? So any simple person can do this with a calculator. 70,000 times 30% is 21,000, all right? So I'm going to quickly change it here because we are learning together. So here is supposed to be 30,000. Okay, 30%. And then 30% is supposed, here it should be 21,000, all right? Sorry about that. So I'm just demonstrating to you that it is really simple. Anybody can do it, all right? So over here, profit, he did take any. He was supposed to take 3,500, okay? He took 50,000. He took 22,000 more. So he needs to reduce next time. 6,000, he saved less. So he needs to increase it by 5,000. Here, he was supposed to do 21,000, but he took 48,000. So minus 48,000, he's supposed to have saved here 20, he's supposed to reduce it by 27,000. 1 second here. Da, 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 da. 27. Yeah. Okay. Like that. So let's go back to our slide, then I'll explain. And I know the questions are burning. I will answer them, I promise. So we have enough time to come on. All right. So this is Kijana Mobile. Kijana Mobile using the Profit Fast methodology. On his income statement, he will show that he got 110. He will show how he divided the admin and all that. But on his Profit Fast methodology, on his Profit Fast account, he should show that profit 3,500, which is 5%, owners pay 28,000. Now I need you to understand that 110,000 is what he made in a year. However, when you're doing the Profit Fast methodology, you don't wait till the end of the year. As money is coming in, 5,000 comes in, you do the calculation and you put the money in the Profit Fast account. What will happen? Your profit account will start growing, your owner's account will grow. However, on the owner's account, we want you to pay yourself. So you want to look at how is cash coming in, and should you pay yourself weekly or should you pay yourself monthly? This will be dependent on your obligations and how you're generating revenue. This methodology holds you accountable to pay attention to how money is coming. Many of us don't. We don't send out invoices on time. We are not paying attention to know how much money we have or we don't have until we don't have money. Then we start panicking. Who owes us money? I need to go to the bank to get a loan. Then we go to the bank says no. We say the bank is bad. The bank is not bad. The bank is there to give you money, but you must show that you are credit worthy. And Suraj told us last week how to show we are credit worthy. When you borrow, make sure you pay on time. Show how you are receiving and spending money, and have some collateral. How can you make a collateral? And I'm sure many of you were feeling when he was talking, how can I have collateral and I don't even pay myself? That's why we are having this conversation. You can have collateral with your profit account, and your collateral can either be, you can have a fixed deposit and you tell the bank, I have a fixed deposit, I need extra money, or you can start using that money to buy assets like a car. A car is not a luxury as an entrepreneur. So it's not a car that you're using to run around. It's a car you can use it for Uber, you can hire it. So you buy a nice car and you use a smaller car, all right? So the big car is not for showing off, but it's for when you need money, you have collateral. You can lease it to companies that do car hire and leasing. Make sure it has the appropriate insurance. Make sure that it has tracking so nobody dupes you, all right? So my timer disappeared here. So moving along here, tax, there's no brain about tax. Hapa kwa operating expenses is where I want to spend a little more time. How much money do you really need to run your company? All right. Run your company in terms of office space, if you have office space, or do you use your house? If you work from home, is there a percentage of your rent that your business can pay? All right. And then what do you have employees? And today you don't have to have employees for 30 days. It all depends. Like if you want somebody to manage your social media, that person can be paid weekly. And they can be paid monthly for producing the content calendar. First, you can pay them one amount of money for producing the content calendar for the year. Okay, let me first, for doing a strategy, you can pay them. And after they've done the strategy, content for the whole year. And then now they post it once a month. So they don't need to sit in your office generating a monthly revenue the whole year. So you will pay them for the deliverable of ensuring that your social media is posted once a month. And once a month, you can have a tool that will post for once a week. Did you get that? So you don't need somebody on the desk every day typing. No. Okay. They do all that at the beginning of the month or whenever it is you agree, you approve it, and you can go back and check, if people have questions, or if you want this person to check for you because you're busy, then you pay them for that. Many of us have employees that are doing nothing and costing us a lot of money. Some of us have employees that are duplicating our work while we are on somebody else's job. So as entrepreneurs, we need to wake up. I know enough people who have shops that their employees buy things that are the same because the employee knows where you buy the things. So they go and buy the things. It is theirs that they sell, but yours stays there and you are working for somebody else. So we need to be thoughtful about there's nothing wrong with being employed. All right. But if you are employed and you have a business, you need to think, what kind of business do you need to have so that one, you pay attention to where you're working, and two, you're able to provide oversight for the business that you have started so that you're not having a headache from employees or getting in trouble with your boss. Decent work is ensuring that you're using your 24 hours properly to make the money that can meet your obligations. So you need to think through it properly. If you're going to be a full-time entrepreneur, what kind of help do you need? What kind of revenue do you need to generate? And how do you need to distribute that revenue? Okay, so moving along here, to reduce non-essential expenses, this is around so that you ensure you have a sanitized cash flow management. Do not go and start this tomorrow. The first thing you need to do is audit your 12 months. Okay, get somebody to audit the last 12 months to see how much money have you been making in the last 12 months, which month is a good month, which month is not so good, so that you know very clearly what you need to do. I'll give you an example. People that have schools, all right, I don't know, people that have schools, when I was going to school, we have 3 terms, and our 3 terms were January to March, and we had holiday in April, but we pay fees in January. All right. So as a school owner needs to know how they're going to use the money a parent pays in January over January, February, March, and April. If they don't do that, then they're going to get busted. All right. So once you think like that, what is going to be paid? If you have premises, how can you make money in April? Because April, the children are not there. Can you use your school for other activities and charge people so you make some income? Can you use your school for other activities in the evenings after the children are gone? So you need to think creatively and use your resources for multiple income generation. And that is just an example. So list down all your expenses for the last 12 months, including recurring expenses like rent, internet access, anything you want. I'm not the proponent of saying, don't eat at Java, don't do this, don't do the other. I'm not a don't ambassador, I'm a do ambassador. But as a do ambassador, I encourage you to be conscious and intentional to know how much money you need to have a lifestyle that you enjoy. You may not start today, but at least you are on the path towards it. Because Java was made for people like you and me. Kempinski was made for people like you and me. So I'm not going to go to Kibandiski just because some consultant thinks I should not go to Kempinski. No, if the consultant wants to go to Kibandiski and save money, that is their problem. All right. So I'm a do ambassador. How much I encourage people to articulate the lifestyle they want, to articulate the work they need to do to create that lifestyle and to enjoy life. I hate don't ambassadors, all right? So As a new ambassador, that is what I encourage you, all right? So I'm a Kempinski girl. I will not go to Kibandiski. I will not apologize for it. And people say, oh, but you have debt, you have this. Even Kenya has debt. Have you seen how much debt Kenya has? And have you seen how Ruto behaves? So everybody has debt at some point. So Raj told us, make sure when you have debt, you are paying it. So don't allow people to hold you that you cannot have a life because you have debt. No, pay it. When you're not able to pay it, make sure you are talking to people. 3, very important, do not borrow for things that cannot increase the money you have borrowed. Do not borrow to go to Zanzibar. Do not borrow to go to Kempinski. Save to go to Kempinski and Zanzibar. Do you see the difference? That is the difference between a do ambassador and the don't guys. Okay. So we are going to go to Zanzibar soon. Let me carry on. So list down all your expenses, okay? And then cut all items that are not essential for running your business. Because remember now you're going to have your business account and you're going to have your owner's pay account. Your owner's pay account, you go and do the things you love and enjoy based on the money that you have. And you work to increase that money so you can do more things that you love and enjoy. So cut all items that are not essential for running your business efficiently by keeping customers happy. You can typically cut 10 to 20% of such expenses overnight. What kind of internet do you use? What kind of, because I realized the other day from one of my contractors that you can have 1,000 for talk and Wi-Fi for the whole month. All right. I put 100 shillings every when I'm working from home. I use the home office Wi-Fi. When I go out, when I leave out of my house, I put 100 shillings for what do you call it? For that for the gigabytes thing. All right. So when I go out of my house 10 times, I'll have already spent 1,000. And within that 1,000, it would be 100, 1 gigabyte, 100, 1 gigabyte. But if I pay 1,000 at the beginning of the month, I will get, I can't remember, I get enough talk time and enough gigabytes for when I'm out there, so that when I'm in somebody's office, I don't keep asking, what is the Wi-Fi password? What is the Wi-Fi password? No, you must pass that stage of asking for Wi-Fi password all the time. But that is a story for another day. You're an entrepreneur, my friend. So there are things that you can do to stop that, all right? So having a big car parked outside is a waste of money. So you can speak to car hire companies to lease your car so that they can use it. Having so many clothes in your cupboard that you have not used in the last 6 months, either give them away or take them to a thrift shop. This morning I was speaking, we were having a founders conversation, and the lady said she gets things from Kikomba and sells them. There's a lady who put in a group recently, if you have clothes that are lightly used and handbags that you don't use, contact me so we can make some money. So your wardrobe is full like this. Some still have the labels. That is, and you're crying you're broke. So this month, do an audit, all right? All the clothes you have not used for the last 6 months, either give them away or send them to a thrift shop and make some money. Then what else? Some other things. So if you have a big car, I already talked about that. And then do you have space that you don't use, memberships that you don't use? All right. So audit your memberships and find out which one are you using, which one are you not using, who can hold you accountable. You know how we pay to go to the gym or we pay to do for this and the other. So pay attention. Which one are you actually using? Deposit all your revenues. Once you've done, do not cut staff. Okay, it says do not cut staff salary. I believe in adjusting staff salary, adjusting staff. I want to be careful how I say this. So, as an entrepreneur, you cannot afford to pay somebody a fixed income if you yourself you don't have a fixed income. There was a time I was paying somebody a fixed income that I was not paying myself because my company was making money enough to pay that fixed income, but I had not discovered this methodology, so I had not carved out my owner's pay. I'll just take money when I need money, and I do things when I want things. And there was a client who was giving us work consistently for training in certain seasons, and I knew that season would come, so I planned my life for that season. But you can do differently. Find a way to ensure that you're making money every month, whether through your own business or through partnerships. I shared about partnerships so that you don't have rainy days. If you plan for a rainy day, it will rain. But if you plan for a fruitful day, it will be fruitful. So it is really up to you. Deposit all your revenues in the income account on the 10th and the 25th of each month. All right. So remember, we talked about real revenue. So the first account you have is when you're sending out an invoice, people will pay you into the income account. Like Kijana Mobile was paid 110,000. All right. And Pesa from here, cash from here, all the amount of money he had was 110,000. And then his real revenue was 70,000. All right. So income account is all payments. And then real revenue goes into the income account. And out of the income account, you now distribute according to the percentages. 5% owner's pay, 30% uh, OPEX, operating expenses, and then 30, and then what else did we have? We can go back, it is our slides. So real revenue, the 70,000, 70%, 100% of 70,000 goes into real revenue, 5% profit, 40% owner's pay, tax 16%, and then operating expense 30. So distribute the income balance based on your tax, okay? Target allocation percentages, all right? Transfer the full amount from tax and profit accounts to the two no temptation accounts. I said open 5 accounts. Make sure that your tax and profit accounts are accounts that are not easily accessible. Your tax account should be accessed once a month to pay your VAT. Your profit account should be like a fixed deposit account that you can use as collateral and not just use it willy-nilly. You can use it for fixed deposit. You can save money. It's really a savings account. You save money there for buying an asset. Let us stop saving for rainy days and let us start saying we are saving our profit for assets. Okay, we are saving our profits for investments. Then let's move on. Transfer the full amount. Okay, I already said that. The no temptation account is an account that you can't open all the time. Take your allocated biweekly salary from the owner's pay account and pay your bills from the OPEX account. So every time money is coming in, you make sure that what your owner's pay percentage goes into a separate account. That can also be a savings account, all right? In that savings account, it should be one that you don't have charges or you only get charged when you withdraw, and you make sure that you're withdrawing no more than twice or once. Twice if you have money coming in every day or every week, so that account is growing. But this way you can say that you pay yourself twice a month and stop telling everybody, mwisho wa mwezi, mwisho wa mwezi. No, you tell them, I'll pay you. I'll pay you around the 10th, and they don't need to know what you're doing. And then pay your bills from the OPEX account. So in the OPEX account, that is where you pay electricity and every other thing that, we all pay different things. So know yours, okay? And then on owner's pay, that is where you buy things that you love and enjoy. Stop dipping your hands into the business account. When you go to the bank and say that I need money for XYZ, you can show them these are my audited accounts, but this is my real-time cash flow accounts. And you show them the 5 accounts and they see how things are going. You will see how different the conversation between you and them is going to be. So first steps to implement profit first methodology. Open 5 accounts, and you can go and speak to a DTB account manager and let them know that during the KBA DTB workshops, we learned something called profit first account, and I need 5 accounts. My regular account is okay. I need a fixed deposit. I need an account that I can deposit my profit percentages that can give me, that can earn interest? Is it a savings account or is it a fixed deposit account, depending on how much you have, all right? Then I need a savings account for owner's pay that I can be putting money for my monthly pay and withdraw when I need. Explain to them, they will guide you what are the best kinds of accounts to open. Start with small allocation. You may start with 1% profit if you find that 5% profit is taking away from you from the operational expenses. And then schedule allocation days. Remember, we're saying schedule allocation days because you're a business owner, you're making money every day, you're making money every other day. It all depends what it is that you're selling. So all the money comes into the income account. So now you have a way that once a week you're removing money from income account into the other accounts, into the 5 profit fast accounts, all right? Track and adjust over every 3-6 months, and you're going to find that you have a pulse on the money you're making and it is clearer for you. Cut unnecessary expenses. Notice I did not say cut things that you love and enjoy, all right? So I've already shared the real life story of Kijana. I've shared with you the Profit Fast methodology, and now I'm happy to answer your questions. I know there were hands up. We have 11:51. I'm going to have us take a break. Let me finish this. We're going to take a break at exactly 12. Put your questions in the question and answer, and we're going to come back to answer them. What are some common pitfalls and how to avoid them? The first pitfall is it feels too complicated. Anytime you're going to start something for the first time, it will feel complicated. So start small, allocate small, and focus on consistency, not perfection. Somebody told me vitu kwa ground ni tofauti. Things don't change overnight, all right? First, do an audit to know how your cash is coming in. Open your accounts and start. Do not open the accounts before you do an audit to understand how money is flowing in and out of your company. Not separating accounts is another pitfall. Many of us have all our money in one account, and we are happy when we look at our balance and we see it is 6-figure income, but it's not doing anything for you. If you put it in a profit account, it can earn savings interest or fixed deposit interest, depending on what you're doing, and you won't take it and use it for something that doesn't make sense. The other pitfall is overspending on operating expenses. I've already shared with you how I discovered I was spending money without, thinking, all right? That 100 shillings every day, as opposed to paying 1,000 for a bundle that can keep me the whole month. Then let scarcity drive efficiency, all right? Avoid borrowing money for things that do not make money. Don't borrow money to do your hair, your nails, and eat at Java. Those things are good. Use your owner's pay to eat where you can. All right. So I like Kempinski. I don't eat there every month. All right. I could if I have the money, but I know that okay. This when I clear this contract, I need to do something good for myself. So I look at my owner's pay. Where is it at? Can it afford? Then I do. So be reasonable. A time is coming you can eat at Kempinski every day if necessary. I don't think it is, but I hope you understand what I'm saying so you don't quote me wrongly out there. So dipping into the profit or tax account, very dangerous. Remember the profit you're saving for investment or assets, your taxes you're saving to create a good relationship with KRA. Because anytime you want more, you want the bank to lend you, you want somebody an investor to invest in your company, they're going to ask you for a TCC, tax compliance certificate, and you want to be able to give it without any problem. Delaying or skipping honest pay you see, because right now we are at no, we are not paying ourselves. We are paying ourselves sometimes. It's better to start with small than with nothing. So if you start this process, the next time I ask who is paying themselves, you are going to be saying yes 4 times, not like the people who said no for n, 4 no's, you get. So it is starting small. We are all learning. if this is something that makes sense for you, I know we have an accountant that can help you do that. When I say things like that, remember that is a service that you pay for. So don't send me your email or a message if you're not willing to invest time and money, because that is what we do for a living. But DTB has called us to share with you information and insights that can help you change the way you do things for a more sustainable business. So you need to understand, not just when you're at DTB, when you go for anything that is free, it is that organization investing in you to get information to help you grow. So now you get the information and apply it. Okay, when you apply that information, your life changes. But expecting to get everything for free because where you got it was free is an easy way to kill your business, but it's also a mindset that needs to change. Now, trying to fix everything at once, you can't, all right? Even the doctor, when you go and you have a problem and they give you antibiotics, they tell you take it every day for 7 days, okay? They don't have one pill, take today, come back and see me tomorrow, you'll be okay. All the problems of man can be changed over time. All the traits of success can be changed over time plus work. All right, not time alone. If I fail, if I fail, let's say from 4, from 6, whatever, I don't get the grade that is required, I don't get the certificate. It's not only time that will change that situation. It is time and me putting in the work, taking the exam again, and then I change. So we must understand that change happens because of process and time, through process and time, not through time alone. Because I often hear people say that time changes things. Time doesn't change anything. It is what you do during the time that changes. And I'm going to go back here and allow you to ask questions. And we're going to take a break. It is now 12 o'clock, 3 minutes to 12. And we're going to come back at exactly 12:10. You have the opportunity to put the questions in the question and answer, or you can be ready to open your microphone and speak to us. Thank you very much. See you at exactly 12:10. Bye.
Welcome back, ladies and gentlemen, to part 2 of the session. Karibu sana Frida. We can continue.
All righty. So great to be back. Wi-Fi. All righty, fantastic. You saw my message. So I can quickly answer the questions I see. My Wi-Fi dropped, so I'm getting support to get the other questions. I opened as part of the Moment DTB account at a farmer's fair 2 years ago, but it has been totally inactive. How do I reactivate it? Please visit a DTB bank account with that account number, and a DTB relationship manager will help you. Which types of bank accounts does DTB have that align to what Frida talked about? Are we able to get a DTB accounts person to tell us the kinds of DTB accounts there are, Mantui?
Allow me to put in the link our product guide, which will break down all the products that we do have and the charges that are in each of the products.
Fantastic. You see, DTB are at work. They are ready. They are ready. So thank you very much. And then from the previous questions, I see I have a question concerning tax account. How would you advise me in real estate business? I pay different taxes. I also pay stamp duty and is charged depending on the value of property. Eunice, I would like to answer your question. I'm not an accountant. You need a tax accountant. If you'd like one, you can send us a message at our WhatsApp. It's a WhatsApp. So you send a message and we'll send you the number of the person you can call. All right. And our WhatsApp number is, wait, I'll give it to you. I'll put it in the chat. Hold on. What is the difference between the direct expenses and the operating expenses? Fantastic. Direct expenses, remember Kijani Mobile made 110,000. And he made 110,000. People were paying him for telephone, different kinds of things, all right? And then we said that his direct expenses were 30,000. Direct expenses are what he spent to make the money, like buying the phones, buying the different accessories. He spent 30,000, but he made 110,000. So direct expenses are the expenses that went into generating the sale. Operating expenses are regular recurring expenses. Your rent, your telephone, those standing fixed charges that you spend every month are your operating expenses. So that's why you have the two percentages, all right? And then the other one is, if things are thick, can you withdraw the amounts from the profit first account and tax account? Tax account, never, no matter how thick things are, because when you do your eatings, it shows that KRA that you made a sale. And remember, it is not your money. It is the government's money. When you sold something, somebody paid you 16% to hold for the government. That's why I say that tax account, never. And it is a discipline and a mindset. Hiyo 16% si yako, ni ya serikali, you are a conduit, okay? And then the profit account is supposed to help you to make more money, all right? So if you have money in the profit account and things are thick, I hope it's a savings account or a fixed deposit account. You can go to the bank and use it to borrow money. So these things that are thick, it is something to do with the business. See at unalala nja. No, nja should be from the owner's pay account, and it is a discipline that you start. Okay, thank you very much for those questions. And then let me make sure. So I've answered, where is the contact of the person who takes slightly used clothes? It was in a group that I'm in a while back, so I don't. If you send a message to our WhatsApp and you say use clothes, I can ask in that group, Nikipata, I will send for you. My second question is concerning the bank account. Should I have 5 different accounts? Does DTB have one? DTB has many accounts, and Mantui has put a link in the chat for you to know which accounts they are. I recommend walking into the bank and speaking to a bank manager, a bank customer service person. Is it okay for a business owner to have an employee in the earlier stages of the business, even if I'm not taking an owner's pay, but using the owner's pay to pay the employee. For context, I'm just starting out and still holding on to my 9 to 5 till the business picks up. Now, number one, your employee should be in the operating expenses. You are doing 9 to 5 and you have a business, your business should still pay you. Because the reason you are doing a business and you have a 9 to 5, I believe, is because you want to make more money. So I understand your good-heartedness. You want to pay your employee, but you need to follow this system so that you have a savings account. Because what if that 9 to 5 ends today and you've only been paying the employee? And a business that cannot pay you even a little, whether you're doing 9 to 5 or not, is that really the business you want? Those are questions we should ask ourselves. Because many of us are we're in business, but we are not paying attention to, is this really meeting what I want to do? Even if it is not now, but is the little I'm collecting going to meet the bigger objective in future? Those are questions you need to answer before I can answer this question. So moving along, that one is done. Let me delete this. Do, 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 do. Da, 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 da. Okay. Tailoring the profit first model to our context, should we include SHA NSSF in taxes section or in operating expenses section? That is a good question. It depends on how you pay yourself. Because if you pay yourself a consistent salary, this will fall under operating expenses. If you pay yourself as a contractor, you need to pay yourself you need to do withholding tax, and then the money you have pays your NSSF and your SHA. Is it SHA? Yeah, all right. So I hope that answers that. The next question, in profit first methodology, what's the difference between profit and owner's pay? A question I get all the time. Profit, remember Kijana made 100,000. Okay, and out of Kijana's 100,000, we said 5% is profit and 30% is owner's pay. Owner's pay is money the owner will receive at the end of the month or any other designated time for their efforts in the business. Profit is the money that is set aside for assets and investment, what we ordinarily call a rainy day. I'm a do ambassador. I don't do rainy days. For rainy days, I use an umbrella. Kindly give a recap of profit first schedule. This is new concept for me. It is new concept for everybody. So I will just give me 1 second. So, and there were some people that had their hands up. So let's hear from those people. And then I will do the recap. Just now, I see Monica Murage. Monica, I'm coming. Kevin says, is there a mechanism where you can subdivide money from a main account to the other 4 accounts? Yeah, some banks have what you call standing order, but the mechanism of the money has come, this percentage should go to a different account may require a bit more technology automation. You will need an IT guy to think that. I'm sure there is. Nowadays, there are so many of these things, but you may need to spend a little extra for that. Otherwise, once you do an audit and you have an idea how much money you're making and how much you're going to the different accounts, you should be able to think through of a standing order. Anonymous says, if you're a business owner and employee at the same, how do you, wait a minute, how do you make payment? All right. So one of the things, and this is something I get all the time because we need to develop a mindset to understand how to generate revenue and why we are generating revenue. So you may be an employee, okay? As an employee, your employer must pay you at the end of every month, all right? So if your employer is paying you every month, but you have a business, you started a business because you want to make more money, all right? One day your employer might ask you to leave for whatever reason, or the business is not doing well, or it is time for you to retire. So this, your business, should have some money to help you on that day, or even to do other extra things like investments. So it is important to know that if I'm doing 9 to 5, employer pays me. If I'm doing self-employed, this business should pay me, because the purpose of a business is to generate money. And that money that it is generating, some of it must pay you, who has created that business. Ama ni bure. We need to have those candid conversations so we stop complaining that the government, I don't know this or the other. There is enough problems we need to solve outside what we passionately enjoy that people can't pay us for. Do you understand? So you can't just stick around and say, me, I'm just a trainer. When you're not training, what are you doing? What can you do? And what can you do that somebody needs and you'll get paid? And then hii njaa itaisha. Hii njaa yetu ni mindset yetu. Okay, vile tumejiweka, I can only do this, all right? Na mashida ziko nyingi Kenya yote. So let's go here. Hi, Frida. Kindly guide on the, I see the hands, kindly guide on the most profitable and sustainable side. Juma, you are joking. Startup business specializations can begin with 200K. I will not guide, and this is the reason. There are people who have money but are not willing to put in the work. All right. So I need to understand who Juma is, what he does, how much time does he have, what skills does he possess, what is his temperament, which industry will be best suited to him before I tell him where to take his 200,000. One thing I want to say is food. But which restaurant are you going to start? People eat every time. Everybody in the food, most people in the food industry made money during COVID, all right? Something in IT, all right? But if you're saying 200,000, I don't know you, I don't know your capability. Consultants are going to tell you many businesses. Personally, I like to have a little more information before I guide. I'm a coach, all right? So talk about plowing back the profit. Do we have a formula too for this? You see, this plowing back the profit is a mindset and it's a myth. Tuseme tu ukweli. All right. But with the profit first, you will see that account. You will see it is 100,000. You will see it is 50,000. No matter the amount that it is, you can decide, am I going to put it in savings? It will be getting an interest. Am I going to put it in a fixed deposit? It will be getting an interest. Plowing back means that money has grown and I'm buying an asset that will continue growing the business. Then we are making sense. Okay, and I'm sure you have other ways of doing it, but that is my way. I'm actually asking for a friend who needed my suggestion. Okay, your friend who needed your suggestion is good. We would need to know your friend. What skills does he or she have? What kind of work is he or she willing to do? Is he or she going to be doing the work herself, or are they going to hire somebody? So Juma, I'm not speaking directly to you, and speaking directly to that question. Before we ask somebody, what can I do with 200,000? A reasonable coach or consultant would like to know what, because money doesn't increase on its own. Money increases based on the work we put, time and work we put on it. So that is why I said that. And I'm sorry if my response offended you. Monica, I see your hand up. It must be tired. How can I help you this morning? Monica Munge, you can unmute and speak. I already answered Kevin. Monica, when does one know if when you are ready for buying assets or investments? All right, Nazim, great question. You will know when you're starting. Remember, we said do your 12 months audit, know how money is coming in, know how you're spending that money. You're going to see areas you need assets or there's something you need to invest in. Note it down. How much is it? So that as the profit is growing, you can use it for that investment or asset. Again, it is hard to say when because it will depend on the asset, it will depend on your business, it will depend on how that money is growing. Monica, I saw your hand up. It is not speaking. So David Combo, good morning.
Good afternoon. How are you?
Very well. How can I help you today? What question can I
Thank
answer?
you. Thank you for the brilliant session for us. Basically, it's not much big, but for that, I wanted to know how basically we would choose VAT or income tax. Basically, what incentives or other pros do I have on some few years ago I had been running a company, but even
I'm sorry, I can't hear you. Hold on. You're really breaking. Come close to your device. We can't hear you. Do you have earphones? We can't hear you. Start
audible
again. Better?
better.
Yes, that's better.
Okay. Okay. I just wanted to know first about the VAT over income tax and what incentives are there or other pros on one over the other.
I missed one over the other what? And what was the question?
Income
You're
tax
sounding like you're in a
versus
home. Sorry?
I think he's saying income tax versus VAT. I
What
hope I got
about
it.
that?
Yeah, what maybe David, you can try one more time. Or rather, maybe we can request you to write on the chat the question so that we get it correctly.
Yeah, he's really breaking. I don't want to assume his question, but I think I have. Maybe he's asking the difference or what are the percentages. Ask your question so we guide you appropriately. There's a question. Okay, so you can put David Combo's hand down. He can ask his question. There's somebody that is asking about investments. This is not an investment session. I'm not an investment advisor. I'm not even going to try and be smart. If you send us a message on the WhatsApp, I will send you the number of our investment advisor and she'll be able to advise. Angela Mbonche, and I want to share, I don't know our office number offhand, so hold on. How do I pay myself when I have to wait for payment that can take anywhere between 6 months and forever? Do I overdraw my account? No. That's a very good question. All right. Number one, business in reality. I'm a business owner and there are different kinds of businesses. All right. So there are those who do tenders. They fall into this problem I'm reading here. I don't know what it is that you do, but as a business owner, you need to ensure that you have business tiers that generate revenue every month. The minute you have a revenue line that does not come every month, you're going to fall into trouble. That's number one. Profit first works as soon as money hits your account, you separate it. As soon as money hits your account, you separate it. But if you're finding that 6 months comes and you have not received any money, you must ask yourself the hard questions. How am I paying bills? Do I borrow? Do I have a spouse who gives me money? Do I have a sponsor who gives me money? Be very candid with yourself. Where is money coming from? Because if you are not, then you cannot fix that problem. Because if you find that I don't have 6 months pay, so during that time, a loved one helps me. So what if that loved one is not there? What will happen? Okay. That was me. There was a loved one called a husband. He's no longer there. So I have to figure it out every month with 3 children. Women, we fall into that trap. We have a business, and I'm not saying that is Angela. The thought has just come to me. We have a business, but we have our spouses also helping us, which is wonderful. But if your spouse is helping you and you don't know how to generate revenue yourself, God forbid he ceases to exist. That is what happened to me. All right. And I learned that from my mother who was doing business. So let me not get that. That's not my whatever for today. So let me answer. Oh man, I thought that internet threw me out. So let's go back here. So because money markets, okay, that's when I said, if you send me, I'm going to share my number, the office number here. You send a WhatsApp, you'll be given the number to ask that question. between money markets, better interest, that I'm not answering that. I will share the number. Kindly differentiate once again the 5 types of accounts. Let me quickly, the 5 types of accounts, I'm going to, allow me to share my screen so that I can show them to you as I give the phone number. And be ready to take a screenshot. Be ready to take a screenshot. I allow people to take screenshots, so not so that you go and you can do whatever you want. I'm tired. uh, so the 5 accounts. Are you ready to? Are you ready to take the picture? Okay, take a picture of this. Take a picture of this Kijana one. We see on this Kijana one, you have on the second column the percentages that are correct, but these are percentages for the amount of Kijana sale. So let's come here. I think this is a better picture. Take a picture of this one, all right? So real revenue, remember, is the money after removing direct expenses, all right? So money after removing direct expenses, you have the real revenue account, and then the other accounts that you need to create are right there. So I hope that that helps you. And like I said, anything you hear for the first time is going to be confusing, complicated. It is normal. That is how your brain is wired. So don't expect to understand everything out of this here today. Number one, you can go to YouTube and look for Profit Fast Methodology Explained. You can also buy the book and read it. And if you want help with it, you can get one of our Profit Fast professionals to help you. All right. So, and then you wanted, for those that want help, that I've said, if you need help with a tax consultant or you need help with investment, somebody, please take a screenshot of this. Okay, they didn't put our number here today, so let me let me find our phone number for you. I was going to give you, I'll put the phone number in the chat. Can somebody please help me ask the questions as I find the office phone number?
All right. I think we've seen David's question on chat. He asks,
Read it out for me,
all right.
please.
For the starters, what is your advice on VAT versus income tax? And are there any pros of one over the other? This is putting into focus the level of the SME growth status to full functionality.
That one wants to take me to jail, and I'm not going, but here is my answer. Number one, okay, this is the passion profit number. Can somebody please put it in the chat as I get my thoughts ready for David? 0742 368 796. 0742 368 796. For anything I said, if you want the investment person, I can send you the right person to speak to. If you want a tax consultant also. But to answer David, VAT is 16%. He asked VAT and what income tax, all right? Those are two different tax brackets, all right? And it has nothing to do with how your company, okay, let me go back. VAT, any SME should be ready to pay VAT if they have made cash flow of 5 million and above. 90% of us are not counting. We are just hiding behind, we are not paying it. Number two, the day you get a corporate bid or you want to get an investor or you want to get a loan, you will need a tax compliance. You might not get it if you have an entity and you're not paying those things. So the key thing is to understand why you pay them, not run away from them. VAT you can't run away from, okay? Now, income tax is dependent on how much you're generating as an individual and the percentage bracket that you fall in. There are some allowances that are allowed. I'm not a tax consultant. I can send you the number of a tax consultant to answer beyond that. I hope umesaidika. All right. Are there any other questions in there that I haven't answered? How would one ensure employees are not doing their own business within yours? First of all, I don't know you. When I say things, don't take them personally. All right. Employed people are always stealing from. In Kenya, this stealing thing is sad. Employees are always stealing from employers. All right. So now, as we start as a business, so the first place I want to start, if you are employed, please don't steal from your employee. Don't steal from your employer, because what goes round comes around. All right. Number two, if you have a business, who are you employing? What is that? How are you cultivating trust with this person? Because if somebody is so bold to steal from you, there's a bigger problem. There's a character problem, there's a relationship problem. You get? So you need to have a business that you have peace of mind, but you can't be sleeping awake all the time. Huyu mtu ananiibia. So it will depend on the kind of business you have, the kind of person you hired. Notice I don't give blanket answers because there's different things that make people behave differently. And I would need to understand, what kind of business are you running? Is the employee really stealing? All right. This employee, why are they stealing? There are many reasons that will make somebody steal. Either they're just a bad person, or they feel you're paying them a little, or whatever reason. You understand? But these are issues that need to be dealt with separately. All right. If you have a shop, you can have a camera. Okay. But because when you have, but see, you must have a camera, you'll have it even hook on down your inventory. You get. But I think talking to people and getting to understand, cultivating a relationship, the people who have had the same employees for a long time for different reasons. So that is an HR conversation. Perhaps you can ask DTB to give us another session. We do people relations. All right. I can't answer more than that. I'm sorry. Must a business pay the owner in its initial stages of operation? Now, that's you see, that is a mindset and a myth that we must deal with as small business owners by asking ourselves, why are we starting the business? If we are making the business to make more money, the answer to this question is yes. But if you're starting this business as a hobby, the answer to this business is pay yourself when you want. Do you see the difference? Because if I'm starting, there's no company that has come from abroad to Kenya to set up and they said, because we are just starting, we are not going to pay ourselves, we are not going to pay the people. So no, they do the math. To run this business, what is it going to cost, right? If I have a 9 to 5, all right, I'm investing in this business to give me more money than mine, to give me more money on top of my 9 to 5. If I don't pay myself, how will I know if that business is working? Investors want to know if you're paying yourself, because if you're not paying yourself, they cannot invest in your company. Their thought is, what if you die? Who is going to do the work that you do? They'll need to start hiring, and the money you're showing them you make does not include your salary. So it's going to dip into their money. So I encourage you, wherever you are in the season of your business, think it through. This thing, I wake up every day in the morning, it keeps me awake at night, but it's not giving me money. What am I doing? I had that kind of conversation with myself in 2017, and I had to change how I do things drastically. All right. So I'm not telling you things I read in a book. That's why you can't hear me quoting any book. I'm telling you things that I have gone through as an entrepreneur. And I talk to entrepreneurs across from me. I'm asking them, how much do you make? When was the last time you paid yourself? The answer is they don't know, and they are not paying themselves. And I'm asking myself, what are we doing? You get. I'd rather take a job at doing something I don't like to ensure that I have money every month than continue knocking my head doing a business that is not paying me or meeting my obligations. There's a problem. And it's not failure, it is discovery. We are afraid because the same people will say we have failed. We have not failed. A setback is not failure. A setback is discovery. And what you do with that discovery will determine whether you fail or you jump back. Am I making sense? You have a comeback. All right, but we are not asking those questions because we are shy. What will people say? Yesterday they saw me selling cars. Today they're seeing me selling clothes. They don't pay your bills. Make sure you are selling something. Whatever you do, or you are not in business. I have a mentor who says, Frida, all that English is great. How much money did you make? If you didn't make any money, I'm not interested. And in corporate, if you're not if you're not affecting the bottom line, you will go. Things are thick. You see, people have pressure for numbers and deliverables. There are places you're paid on your deliverables. Okay? I
Apologies for that. I think we've lost Frida. Um, all right. We hear you. She will be rejoining shortly. Thank you so much for your questions. I see a few people have their hands up. Juma, I'll allow you to ask. I don't know if it's a comment or a question, but we'll recap for Frida when she comes back. So Juma, you can go ahead.
Hello, good afternoon.
Good afternoon, Juma.
Thank you so much for this wonderful opportunity you have granted to me. I just want to express my deep gratitude for the time you have accorded us, to the organizers of this event, to the Diamond Trust Bank in collaboration with the KBA, and of course our host and the session coordinator. We want to express my gratitude to you so much. The session has been very insightful.
Juma, I think we've lost you. And I see Frida is back. Well, welcome back, Frida. Juma, yeah, sorry, you can continue.
Where are we? Sorry, my internet threw me out again. I've just put data bundles.
No worries. So Juma was talking, but I think also his sound has gone out, but he was just expressing gratitude for the session and all the sessions in general. Yeah, I think, Juma, if there's something more, maybe you can put it on chat because we've lost you. Yeah, so Frida, back to you. Thank you.
All righty. So thank you very much, Mantui, for your support. Thank you, everyone, for being here. And I must commend you as business owners. Running a business is not the easiest. And one thing as I answer these final questions, I want to encourage you. Be conscious and aware of why you are in business. Number two, be conscious and aware about where you get information to make decisions. Not everybody who speaks, consultant, coach, advisor, and otherwise, has information for your particular business. You notice there's some questions you ask, and I tell you, this needs this kind of person. I find that sometimes as business owners, we need help so much we take information from anyone and everyone. Be selective. Be very selective about who feeds into your business. Just like you don't let anybody give your children food, be selective. So why does the owner's pay percentage decrease as income increases? That's not true. The percentage is the same, all right? It is 30%. So if you get 5 shillings, 30% of 5 shillings. When you make 100,000, 30,000 of that amount. But I think I hear your question. You're talking on the larger chart. On the larger chart, because probably you are also getting directed dividends. It will depend on it will depend on your business, really. But the big why is as your business grows, that percentage is smaller, but it's going to be bigger money. 30% of 100,000 and 30% of 1,000,000, there's a difference. But 5% of 1,000,000 can be a better asset reservoir for you. So think like that. Don't just look at one number, okay? Look at all the numbers. I hope that answers your question. So how does DTB, some questions come and they disappear. So I'm not sure why, but how does DTB come in to offer financial solutions for its customers in scenarios like these? Oh, I believe you're asking in scenarios like if you don't have pay for 6 months. Now, the first thing that a bank will ask you is, why have you been waiting for one customer for over 6 months? All right. Number two, if that was a tender or some kind of, you know that this person normally takes longer to pay, you should have a defense mechanism for it. It is like the people who are serving Nakumat, all right? Many people were serving Nakumat because when they started, Nakumat would pay every 2 months. As a business owner, every 2 weeks. As a business owner, if somebody pays you every 2 weeks and suddenly they're not paying you until after 30 days, that is a red flag. You should find other work, even if you want to continue serving them, but you should find another thing that you're selling so that when they're late, you are covered. So in as much as the bank may step in to help, I still go back to the entrepreneur. Be conscious, be more aware how your money is coming in and going out. Do not raise the alarm at 6 months. 6 months is too late. Cash is king, Suraj told us. Cash is the lifeblood of a business. Me that is running my mouth here, if I don't have blood, people will start being called, do you have O positive blood? If I don't get that O positive blood, I will die. So that is what we're doing with our business, my friends. So what I'm saying may offend you, you may not like it, but I am challenging you without fear or favor. Go back and look at the last 12 months. How have you been if you're running a business, how has money been coming in? What is your income? What are your expenses? What are your obligations? Is that business really supporting you? If the answer is no, don't start making excuses. Start thinking, what do I need to do to generate revenue that is going to keep me afloat? There's enough WhatsApp groups that are being opened, all right, for one thing or another. No, that is not how people live in other countries. I lived in America. Nobody called me for black tax. Nobody. You get that? So as business owners, we are the backbone of this economy. We should ask ourselves those hard questions. We should be willing to listen to the freeders, not just the motivational speakers who tell us you can do it, you can do it. No, after you can do it, step back, look at your accounts, ask yourself, what am I selling? What am I really selling? Who is helping me? How much am I paying them? All right. If we don't ask ourselves those candid conversations, our businesses are going to be in the statistics that don't make it to the 5th year. Personally, I'm tired with that number. I'm tired of that number. That number is there because we are not paying attention. And I stop there. Mantui, I think I'm done. I love you all. You have the office number. I give you the office number. You can send a WhatsApp. I'm not the only person at Passion Profit. When you send a WhatsApp, the most appropriate person will contact you. All right. So it's not a telephone. So don't expect that every time you send a WhatsApp, somebody will respond then. You may get a response 24, you will get a response 24 to 48 hours, but we are there for you. We care and we love you. You can also email me and I will always respond. Okay, thank you very much. I give it back to DTB. It has been a pleasure serving these wonderful SMEs. I wish you could open your camera so we take a picture of as many as can open their camera. You'll have made my day. Anybody willing to open their camera? I know there's 452 of us, but let's see who is willing to open their camera so we can take a picture.
Let's see if we can.
Are any cameras coming on?
All right, let's see if we
Yeah,
can
you
do
probably be able
that.
to see them faster than me.
Yeah, and as I try and set that up,
Yeah.
maybe we can also just allow, since this is the last module for this year's training with KBA, I'd love to hear from participants on, what your key takeaways have been. We've had some really, what do they call it, paradigm shifting conversations over here. So I would love and just to hear your voices on the same. So if you can just raise your hands, we'll pick maybe 3 or 4 people, and then I'll also now come back to Frida just for your final remarks, given everything that we have covered over 6 weeks. It's not a short period of time. That's a lot of commitment, and we've seen participants staying through from session 1 to module 6, and in fact majority of those who gave back feedback were like, we've been here throughout. So I'll just unmute a few people. I see Angela. Angela, you're unmuted, so you can speak. All
Hi,
right,
Angela.
but I can see the comments as well. So thank you so much, ladies and gentlemen. Let's see. Now you can just confirm for me if you're able to, what is it called? Enable your video.
Okay. Can you see
Yeah,
me?
and
Can you hear me?
we can hear you.
Yes, I see you. Oh, yes.
Mhm.
The session last week with Suraj for me was an eye opener. I thought that insurance is for, saving to pay school fees for watoto and, insurance for your car, insurance for medical. Little did I know that businesses actually insure 1, 2, 3. And for me this was an eye opener that yes, I know that there's insurance for maybe acts of terrorism, but I didn't know that there's insurance for income protection, or in case your customer doesn't pay, or insurance has so much, and now I have to come to DTB and please link me up with the right person so that we can get insurance for the company. Thank you very much.
Thank you, Angela. That's really great feedback, and we're glad that it has taken you a step further so that you safeguard your business. We've left the contacts of DTB on the chat, so for any further support, you can always walk to any of our branches all over the country, and also reach out on call or on chat, on
Thank you very
email.
much.
That is. Thank you, Angela. Jackson, can see you're there. Can go ahead. Okay, I think Jackson might have an issue with oh, there we go. Yes, Jackson.
I would like to express my great appreciation to Diamond Trust Bank for giving us these opportunities to impart knowledge and share wisdom to us. This has been impactful to us in terms of financial literacy and knowledge. I would like to encourage you to continue with the same spirit such that we may acquire the right knowledge which is not acquired in schools with respect to financial literacy. God bless you.
Thank you, Jackson, and we're glad to hear that. It's our pleasure, and financial literacy is one of our key pillars and priorities as a bank, and just to empower our our customers to be able to manage their own personal finances, but also that of their businesses. And businesses specifically are closer to our hearts because we are an SME bank. And so whatever we can do to help you take your businesses to the next level, we are more than glad to support. So thank you so much for that. I think I'll allow one last person, that is Moody. I've enabled you, so you can go ahead, Moody.
Okay. Yeah, thank you so much. The sessions have been insightful. And they remind us actually the way you've organized it, the speakers that have come in, special recognition to Frida. She has done a tremendous job in educating us on financial literacy, and also on the new skills that we've earned. The one that really touched me was the one that we spoke on AI. I think it was on the third session, and also the one that we shared last week on how to incorporate things like a proba when, for example, you are exporting in the exporting business, and that is really insightful. And also self-financial discipline. I think I've really picked that along the way, and how we interact with other people in regards to our finances. And yeah, also it's also just to encourage people also to look at the Ministry for Industrialization and Trade. They do offer a lot to SMEs. Yes, I think we have a lot of funds like Wezo Fund, even the Hustler Fund itself. And despite the negative connotation around it, I think it will be a good place to start from if you have a stable business or if you have a group to go along with. Thank you so much, Diamond Trust Bank, for all this, and may God bless you abundantly.
Thank you so much, Moody, and we are glad that AI was especially impactful to you. Thank you so much. Frida, I'll welcome you just to give your closing remarks. I'm having a bit of a challenge on the photos. I'll still try, but if time catches up, it's all good. Yeah.
Thank
Frida,
you.
For your
Thank you
closing
very, very much. Thank you, Mantui. Thank you, entire DTB community for having us, for having Passion Profit here. We don't take it for granted. Thank you to all the 500 participants and more that have been here every week. We respect you, we love you, we applaud you for being a business owner. I acknowledge business is hard. I've been a business owner in Kenya since 2009. I know the challenges, and for me, running a business is part of creating decent work. So I refuse to allow people to start business and still be broke or not have a clear strategy of how they're going to make money. I was broke when I started, but things are improving. So things should also improve for you, or there's no need for me to be a consultant. So I respect you. If there's anything I've said that has landed badly for you, I often say when you hear me, there are two things you can get. You can get wisdom, or you will catch feelings. If you find you're catching feelings, go to the drawing board. Don't harbor it in your heart. Ask yourself, when Frida said this, why did I get offended? Is there some truth in it? Remember, Frida doesn't know you, all right? Is there some truth in it? What should I do? Let us be honest with ourselves when it comes to business. Let us not just encourage people to tell us the things we want to hear and there's nothing in our bank account. It will not do us any good. If there's no money we are making, there's no harm in changing. It is called pivoting until you make money, because without money, there is no business. And without a business, we need to look for a job. There's nothing wrong with getting a job. All these are vehicles for getting money, and we all need money to thrive on this side of eternity, all right? Pay our bills, do the things we love and enjoy, eat in nice places. Remember, I'm not a don't consultant, all right? So I encourage you, keep it up. I applaud you. You're doing a good job. I don't know you, but I say you're doing a good job. Go and look at your bank account and tell yourself good job, or do what you know to do. Thank you very much. I give it back to Mantui. The Lord bless you. Bye-bye.
Thank you. Thank you so much, Frida. It has been an amazing 6 weeks. Thank you so much for taking the time and for being real with our participants. Thank you to Faith, Abigail, and Lillian, who've been our sign language interpreters for the 6 weeks. And most importantly, thank you to all the participants for your engagement, your enthusiasm, and your participation. So thank you all so much. We will be giving certificates to those who meet the threshold of attendance, and we'll also share an email with all the modules and the presentations for your review, even beyond this. And you can always go back and check them out. And we will also share a survey. Again, we just want to understand what is working, what is not, how can we improve, and just stay tuned for more exciting sessions throughout the year, and see you when we see you next. Thank you, everyone, and have a good day. Goodbye.
Thank you. Bye. Thank you so much, Mantui. Bye-bye. Thank you to our sign language people. Bye-bye.